Good evening guys, how are we all doing? So Dan from Trading with Dan here. This is our Bitcoin evening update, so we will go straight over to those charts. We're on the daily. Goes to 4 hour first. So as you can see, we've had a bit of weakness today. We are starting to look not too good here inside this support zone that we've got going. You can pretty much see we appear to be forming a descending triangle here. Obviously we've got it drawn in a fashion. We've got this trend line in here that we put in. We can extend that down to this basically this support, which is the flat bottom base of this trend line. And then you can clearly see the descending triangle we've got. So yeah, this is definitely not looking like a good situation. The projected target of this is pretty much going to be well into this 9k zone, which, as you guys know, I've been saying, I think if we do come down to 9k again, I don't think it's gonna hold basically, and I think what we are going to end up seeing is this 8,600 zone. And do I think that's a bad thing? Well, if we see it and bounce off it, I don't think it's a bad thing. If we wick below it, and get back up and rally from it, I don't think it's a bad thing. I kind of think it is the blowout that the whales, the manipulators that they're looking for in this market to fill their bags under here, trigger all the stops they can trigger once we basically lose this zone. And then buy the market up. Maybe I'm wrong about that, but either way, I think we're still going to probably get down there, just based on the price action that we are seeing here. I mean, you can see we're really struggling to make any progress, and obviously we have the. Let me just get rid of those. We have the what's going on with my I think my computer's been slow today. I think I have just done so many videos for you guys, and I have deleted quite a few of them, but I think they're clogging up my computer a bit, because this is only this computer is only really for trading, so it's not like it's a gaming PC or anything like that. So it was never really bought or designed with the specifications for doing so many videos on it every day. Anyway, I have digressed. So so we do find ourselves at this 9,200 support zone again. We do find ourselves testing it. We do find ourselves not being able to get above any of these highs, really, above yesterday's high. We do find ourselves losing this trend line we have drawn in here as well, losing that trend line, losing this support. I mean, it basically spells it does spell curtains, really. Also, I did say when we initially had this spike up here, this was a swing failure pattern outside of this channel. We did break the trend line, we did need to break this resistance and make progress, but we didn't. We got slammed back in. And when you get out of a channel and then get basically brought back into the channel, often you will then reach the target of the bottom of the channel, basically. So as you can see, we've done it a few times. Obviously the first and second time can't really count because we didn't have a channel until that occurred. But yeah, this time we got out, and obviously we couldn't stay out, and we swung all the way back down. And this is obviously the second time, but you can see it to the downside too. We basically swung out, and then we came all the way to the top again. We swung out at the bottom, and we came all the way to the top again. So not really painting a bullish picture here. We have got, just for the record, I'm not working my long positions anymore either. So I was waiting, assessing the market, seeing what happened. I mean, it's just not looking rosy. And if anything, I'm just looking for. I've got the same trade on in the opposite direction. Not as in the same trade opportunity. I don't have it on at the moment, but we have the same trade opportunity in the opposite direction now, which is literally just to sell the level we're at now, and you just need to have your stop basically above the resistance. Well, we can call it resistance. resistance, support, whichever way you look at it. I guess we are classing it as support at the moment, seeing as the majority of the price action's above it, so it is supporting the price. It's not resisting the price. It will be resisting the price obviously if we come below it and we start to spend more of the price action below. But yeah, you can have your stop below. But would I be looking for a back test of this trend line, a test of this trend line that we've got drawn on? Possibly. So that's the only real difficulty. That's why it's never the best trading strategy, and why I don't often do it, just to sell at a point like this. Because as you guys know, I would always talk about the back tests. What I'd want is a sell down, a back test, and then sell. And that would be the optimal entry for a nice short trade, I think. So yeah, that is realistically what I'm eyeing up at the moment. Obviously, we have got that 3-day bullish divergence. The 3 drives of 3-day hidden bullish divergence, but we haven't got that third drive confirmed because we haven't confirmed it as a low on the 3-day. So we don't have the 3 drives until we confirmed it. It was looking like we were going to confirm it back here, but we just weren't able to hold up there. So obviously, bias back to bearish. We are in a pretty well, in a zone where we're not getting a lot of price action range. So that is sort of why it's thin margins between a bullish bias and a bearish bias. But yeah, I mean, we'd have to say I'm flipping back to a bearish bias now. Like I said, doesn't mean I'm just taking short trades now. But yeah, it means that I'm potentially looking for a short trade entries with a target of 8,600, which could certainly be overshot. Certainly. Again, you can sort of see the pennant we're forming here. So I mean, have we come out of this pennant now? Potentially we are. I'm back testing it. I mean, I've got my drawing tools locked. If we kind of drew it like this, we sort of are there or thereabouts. I'm in two minds of whether I should just leave it there. We'll leave it there. But yeah, so you can kind of see we have this pennant. So we have basically dropped out of it. We're trying to regain it, but is this support gonna hold? Obviously, also you guys do know we have got this trend line support where we're at. We have got the top of this trend line support where we're at. We have got this horizontal support where we are at. So we have that will be the reason why we if we are gonna break through, why we haven't broken through already, because we have got a lot of supports here. But it does mean if we do break through, if you break through a stronger support, then clearly you're going to expect a bigger move, and we could start triggering all sorts of moves really from this, and all sorts of expansion of volatility moves that could see us. I mean, I think initially we're easily going to take out this 9,000. If we move to the downside, we're easily going to take out 9,000 in the first move. I don't think there'll be much of a pause there. And yeah, the next stop really maybe around 8,800 for a little bit of a bounce. But I think ultimately we'll be pretty quickly down at 8,600, and then Bitcoin's got to make a big decision. If we look at our volatility metric here, on the daily, you kind of see we are basically very, very low, but starting to tick up on the moving average. So what that means is we could be in for a move up. We can draw a trend line on this as well, as you can see. So we could be in for a move. I mean, I've roughly drawn it. We could be in for a move, an expansion of volatility easily up to this level, and then obviously we could potentially break that trend line, in which case we would be looking for an even bigger move. So this 8,600 is fully in jeopardy. It is obviously my preferred level to get to and bounce off, but obviously I'd rather we never got there, just talking from a bullish perspective, and we just rally from here. But I feel we're not going to have the buying pressure, we're not going to have the momentum to rally up and take out these highs until we do flush out this zone. But obviously therein lies risks of do we go out for the count, do we come down for the 8,000, and do we fully confirm this as a high? I mean, we gave it our best shot to go bullish, but we didn't make it. So realistically, we are looking for that weekly Stokes down move to take us to, well, around 7,000. Around 7,000, as you guys, as we spoke about in other videos, this weekly Stokes here, turning down always has coincided with 30 to 40% moves, so to the downside, and we are fully going down in this oscillator. The only way this can be reversed is getting back above 10k, and 10k, if we want to just round it up to the nearest k, is 1k away. So yeah, so yeah, just make of that what you will, guys. But I mean, I always try and put a bullish, I do understand that I do try and put a bullish perspective onto things, because ultimately I am bullish off this asset, and also I am of the mind that we are in an inflationary, stagflationary, either way it's an inflationary environment. Bitcoin is classed as a commodity, so it should perform well in an inflationary environment. We can still get down to around this 7,000 zone, even wick down into basically the high 6,000s, and what we would be printing on a larger time frame is an inverted head and shoulders, with a very nice projected target to the upside. So macro speaking, that doesn't look unhealthy at all. I mean, you can easily see this range. I mean, you can see the actual bottom trend line. I mean, if we get supported at this level, that's not as bad as we could get. That's not as bad as it could be coming down to this level. So just something to bear in mind. And then before you think that Bitcoin has basically put you to sleep and we're not going to get big moves ever again, just because we've been doing this for these are weekly candles, mind you guys, because we've been doing nothing the past few weeks. This is what we can get in weekly candles. This is what we can get. I mean, even these candles to the upside, each of these weekly candles, its range is near enough bigger than the range of all of these, of any single one of these candles, not all put together obviously, but not one of these candles ranges as big as basically the smallest one of these candles ranges. I mean, this is maybe the smallest one, and I think it's definitely bigger than all of these candles. So, but yeah, you just got to look at these guys as well to the downside. Obviously, market is going to go up the stairs and down the elevator shaft. So I mean, there's the stairs, there's the elevator shaft. So what I'm saying is you can often get bigger candles to the downside. As you can see, small candles, big candle down. I mean, that's a big candle up, but yeah, big candle down, small candles, big candles down. So are we going to see a big candle down? Are we going to see a big candle down? Weekly Stokes is telling us that we are volatility is to high volatility, leads to low volatility, leads to high volatility. We need to exit this regime of volatility. Yeah, I wish I had better news. What a difference a day makes. The amount of days I say what a difference a day makes, eh? But yeah, we will have a quick look at the rest of the Stokes. But they aren't going to be looking good, as you guys can probably guess. Yeah, 4 hour obviously turning down. Here, well, this is there or thereabouts the 8 hour, but it isn't looking too strong here. 12 hour, I mean 12 hour clearly coming down. This was our trend line we were looking for. This trend line, to break this trend line to get some good bullish action. We broke it, we did move up nicely, and we've lost it already. And don't forget, it's a downward sloping trend line, guys. So to come back and break it again, we had to actually travel lower than the level we actually had to break it at. Daily, obviously, turning down now as well. I mean, do I want to just make things look worse? Yeah, 2 day pointing up. 3 days, not 3 day was our one of our trifecta of well, it was one of our three day bullish indicators. It was a 3 day turning up, the 3 drives of bullish hidden bullish divergence, and the TD9 on the 3 day time frame. So what we now have is this is going to turn down, so that's we can X off one of our 3, and also the if we don't close candles higher than where we were basically before, 9,300 9,400 zone, then we aren't going to confirm confirm it as a low. So we're not even going to have the 3 drives of hidden bullish divergence either. So we're literally just down to the TD9. So we're literally just down to this candle here. Whoops. Oh god, can I just undo that and it'll go straight away? Yes, I can. We are literally just down to this candle on the 3-day here. That was a 9, had a nice big range candle, a nice wick below, did rally us up, and we were moving up off this candle. But as you can see, we're not. We have lost that now, haven't we? We've lost this sort of uptrend off here. And this is why we are unable to, at present, to confirm the 3-day, the 3 drives of the hidden bullish diversion. So, yeah, not looking good, guys. Not looking good. In other news, my friend that I talked to you guys about, he's gone. Well, he's got 100k in Tesla now. He's bought some more at basically the levels that we're at today. Wow, gosh, what a guy, taking some taking some longs. He was obviously short from under 9k. He's under 9k under 1k. Actually his actual average entry is about $940. I worked it out for him because he didn't know. So yeah, his average entry is $940. It's 937 to be precise, but yeah, so he's still in under this level, at this level. So in all fairness, this is the level that I did basically say to buy with my charts. Literally the break of this line, which was sitting at 9,000. Oh my gosh, how strange is that? You guys know I haven't moved this line at all. You guys can look at any of my videos going. In fact, I posted this exact chart because I drew this line and I drew this arrow, and this arrow's been on for weeks, and I said this was my target, and I was obviously pretty proud of it just hitting my crazy target. And obviously when I drew it, I was like, this might look ridiculous, but if you break above here, this is the sky's the limit. But so I actually drew the line at what is basically his almost exact entry to the dollar. That's bizarre, isn't it? Don't you think that's strange? And the arrow I drew literally is to where it's gone up to. Yeah, so that's bizarre. That's really trippy. But anyway, yeah, enough on Tesla, enough on major markets. They're looking good again. They're looking strong. Silver above $19, not gold above $18. $18. It is above $18. It's also above $1,800 an ounce. So yeah. Looks to me like they're losing control of the financial system. Just so you guys know, this is why they pin down. People talk about like the gold and silver price manipulation, which is real. Not Goldman Sachs, JP Morgan, basically precious metals trading desk. They basically have a RICO investigation against them over basically manipulating the silver prices. So this manipulation is real. This is going on. So anyway, all my point is that they have to manipulate the price of precious metals down, because if precious metals are allowed to go up and do what they want to do, it basically, what it is directly showing is the lack of confidence in the underlying currency that is valued in, i.e. the dollar. So that is why precious metals are pinned down. But you can only pin down things for so long. Just ask the Tesla shorts. You can only pin things down for so long, and then they just and then you lose control. So yeah, are they basically losing control of the silver market? I am of the mind that they've already lost control, and this is a managed retreat. This is a managed retreat of the gold and silver markets. It's like, we know these are going to appreciate fast. Can we just basically let them appreciate? Sorry, we know they're going to appreciate. Can we just let them appreciate slower, slow down the rise? But eventually they'll lose that. Lots of banks have gone bust or getting out of silver trading. Just their silver short positions are just blowing them up. Nova Scotia, a Scottish bank that's been basically trading in silver for hundreds of years, maybe 100 and something, I don't know, something like that, has exited the silver market because of what is going on. But these guys are gonna get roasted, guys. Silver's gonna go to the moon. Not financial advice. Silver miners. There's some silver miners out there, guys. Mag Silver, one of my favorites. These guys are not financial advice. I said touch wood there. Yeah, touch wood, because I obviously own silver miners, and for this very reason. But yeah, these are going to be the next Bitcoin and the next Tesla. These silver miners, guys. They are the most leveraged play without actual leverage on the silver price. So yeah, I mean, these companies, they sort of struggle to make any money at the silver price. They struggle, and then all of a sudden, so if you think about it, they're working on fine margins due to the price of silver. If the silver then price then doubles, for example, that's all profit added to their tiny slim profit margin. So like let me put this in perspective for you. If we draw a box, right, let me draw a box. I'm not that good with these drawing tools, if you guys haven't noticed. Here we go, it's on here, isn't it? So you've got a silver miner. This is basically it's profit, it's the money it makes. This is the money it makes, right? So we'll have another box. Basically, this is the cost. This is basically its costs it takes to make this amount of money. It costs this much to make this amount of money. So this little box here, this is very simplified, guys. This little box here is its profit. And this is basically purely based on the price of silver. This is based on purely on what it sells the silver for. So if it currently costs this much to mine the silver, right, and it sells the silver for this much, that's its profit margin. So if I was then to, obviously these are shrinking because I'm moving the thing. If I was then to say, okay, the silver price has doubled. So what that means is that we are now going to sell silver for basically this much. We're going to get this much revenue. This is not going to change. This isn't going to change. So its profit is going to change from this difference here to this difference up here. So let me just draw this next to it. It's going to change to this. So if your profit goes from here, this size, if you're making this much profit and now you're making this much profit, right, how many more times more profit is that? So how many more times more valuable is that going to make your company there? And then how many Robin Hoodies and speculative traders are going to start piling into your company because they then think the silver is going to do this, this, and this, and this. So they're pricing forward expectations. So then your profit then goes basically this, this, and this, and this. And then what is that compared to this? So if the share price is based on this currently, and the share price then becomes based on this, that's it. You do the maths. You do the maths, guys. Can I delete this? I can undo it, can't I? So that was a very, very simplistic representation of the inherent leverage to the silver price, the spot silver price that is in holding silver miners. So anyway, a little lesson there for you, a little very basic lesson, but I'm sure a lot of you guys knew that anyway. So anyway, right, so this is it, guys. So thanks for listening. This is not a financial advice. I'm not a financial advisor. Always do your own research, and I will speak to you guys on the next one.